So today I want to cover the home buying process. And let me share my screen real quick with you. I got a hard stop I got a meeting I got to take at 7:15, so that's why I'm kind of rushing. But I went ahead and minimized the screen so I can't see nobody or no chat. So just stop me if you need to. But you should be able to see the screen, right? Anybody, Dan?
Yeah, I got you, bro.
Okay, cool. So this PowerPoint or this presentation, honestly, I put this together. Well, I paid somebody. I created it in Word and paid somebody in Fiverr to make it look good back in 2020. And my goal at that time was to have a document to go over with my buyers. Oh, first of all, I forgot to mention, I'm a realtor. I've been doing it since 2010. I'm also an investor. I own a brokerage out here in Louisiana, Southeast Louisiana. I cover the Baton Rouge and the New Orleans markets, originally from New Orleans. But back to this document. So this document I put together back in 2020 to cover with my buyers to do a buyer consultation. And honestly, I never used it. So I'm gonna just be honest with you. So this document right here that covers the home buying process is all my stuff, like stuff I put together, but I never even used it before. So this is my first time actually using it. So looking forward to see how this goes. So this covers the process basically from start to finish. All right. So this next slide, we can skip this because basically, like, I would be covering this with a potential buyer, but since I'm covering it with you all, it's a little different. So I'm gonna kind of shift gears. But this is just talking about the process. You're about to start this journey with me, yada yada yada. So here's important. Let's talk about this. So my promise as a realtor, this will be my promise to that particular buyer, right? I'm going to be professional, remain knowledgeable throughout the process. As far as scheduling, I'm going to organize and schedule homes to view the property based on your specific criteria. Keep you informed throughout the process, offer advice where needed. Disclosures, obviously, going to prepare our disclosures and documents and guide us throughout the process. Then when it comes to purchasing the property, I'm going to offer assistance with the contracts, things like that. Obviously, I'm going to show you the houses. And one important thing right there in the middle question, it says assist with any post-closing questions. So this screen right here, these are things that your realtor should be doing. All right, specifically when it comes to that middle part, the reason I point that out is because, so I've been doing this, April makes 13 years. All right, and there's a statistic out there from the National Association of Realtors that states that they interview a set number of buyers. All right, when they interviewed these buyers, they talked about how lovely their realtor was and how they would use them again. Specifically, it was 93% of those buyers say they would use their realtor again. Well, they came back and studied those same buyers years later, and only 13% of those buyers used that same realtor again. A lot of them didn't even remember the name of the realtor. Why is that? That's because a lot of realtors, they treat this business like a transaction and not a relationship. So my value proposition here is I don't do that. Like I love on my clients. I keep engaged with my clients even after the process. And that's how your realtor should be. Like, it's not just I sold you the house, all right, I'm gonna holler at you later. No, you should be your realtor should be a concierge, throughout the process, because you're always gonna have questions and things like that. Stuff gonna come up, you know what I mean? As a realtor, your realtor should be that person that guides you through the process. So, with the brokerage here, Service First Real Estate, our motto is we value relationships over transactions, and we really mean that shit for real. All right, cool. So that's my promise to you if I was your realtor representing you. This screen right here. So buyer agency. All right, so it can be expressed or it can be implied. So some states require that the realtor sign a buyer's representation agreement with the client, and some do not. So I started my realtor career in Dallas, Texas in 2010. So my first 6 years, I stayed in Dallas, my first 6 years of my realtor career. Out in Texas, they require every buyer's agent to have an exclusive right to represent agreement with the buyer. That's required. Well, in Louisiana, it's not required. You don't have to do it. However, in Louisiana, I do it every single time because that's how, I started. So I'm used to it. And I'm bringing all that up to say, I don't know what states you're in. We all in different states. And I'm sure you are probably in a state that requires your agent to sign a document with you. So what I would say this, you should definitely read the agreement and definitely understand what you're getting into before you commit to this agent. You want to make sure that there's a way that you can get out of the agreement in the event, the expectations that you have for that agent are not being met, or, y'all butt heads, or you feel that your agent is not truly invested in you and not doing the best for your interest. So just make sure you read the documents before you sign it. But like I said, some states require it, some states do not, and it's just implied. All realtors, they are not created equally. And I want to say that again, all realtors are not created equally. And I mean that from the heart. Some are aggressive, some are very passive. Some have what we call in the industry commission breadth. That's people who they only want to make a commission. Like, they're supposed to be in it to protect you, but not all of them are like that. They just want their commission. They got to live. I get it, but it's not all about the commission. You know what I mean? The way I value it is if you do good work, the money's going to come. You know what I mean? You service people, you serve the people, you're going to get your money. So I don't care about the money on the front end because I know I'm going to get it anyway. All I got to do is serve the client. So another thing I want to bring up when it comes to the buyer agency, like sometimes you may have inexperienced realtors, and that's okay. Like what you want to do is, because like say for instance, back in 2010 when I started, I was inexperienced. But what I would do is I would say, I'm going to help you, and I'm also going to leverage my team, my broker, people at the office. I'm not going to do this on my own because we got to start somewhere. So just make sure if that realtor that you're vetting, if they are new, don't just give up on them just because they're new. They may have the leverage and the resources, available to them that can help you through the process. But that's something you're going to have to figure out by talking to them, having those discussions. You can kind of, get a feeling for it and in just regular discussions. Dan, you about to say something?
I was going to say, truth be told, my friend, also, if you find a person with the good intention, the person who's new is actually mainly likely to go the extra mile for you.
Yeah.
Because they'll want to pick stuff up, they'll want to understand stuff, and they may go an extra 5% for you to get you more information, whereas someone who's maybe more seasoned maybe just wants to tick some boxes. So if you get someone with the right intention is everything. If they're new, they're maybe going to work harder for you.
100% agree. My bad, I had to step away. All right. So another thing is, well, actually, I can tell you the story, a quick little story. So I got my first listing like that. So my first listing, I went for a listing appointment. I have never had a listing before in my life, but I just sold them on the fact that I don't have any other business. So I'm going to put my 100% effort into your property, as opposed to the other realtor they were interviewing that had a large number of realtors. If you just be upfront with them, from the real perspective, if you're upfront with the person, you can get the business, you know what I mean? So like Dan just said, if they don't have a lot of business, they're new, they're going to probably put all their effort into you because they don't have a lot of business to go elsewhere. So on the screen here, you can see some of the benefits of buyer agency protection. So they're supposed to protect the buyer's interest at all times. They're supposed to advise you on all matters, even if it, points out reasons not to buy. So I honestly do that a lot. Like when I'm upfront and honest, if we're going through inspections, I treat every house as if I wouldn't buy this, I'm gonna be honest with you and tell you I wouldn't buy it. Because what I don't want is you to buy a house and then you come to me, a month, years later, having regrets. I don't want that. So if I wouldn't buy the house, I just straight up tell my clients I wouldn't buy this. Like they had one I showed 2 weeks ago, my buyer really loved the house, but I just told them all the reasons I wouldn't buy it. And I was being honest. It would have been a nice little commission, like $4,500, but I'm just being real. I wouldn't buy it. I don't want them to have buyer's remorse. And guess who they're gonna blame? Me. So you want to find a realtor that's going to have your best interest at heart. As far as value, they're going to do like an analysis of whatever property you do find. They're going to do the analysis of that property to see what it's worth and kind of give you strategies on how you should go about presenting that offer, which we'll talk about a little later. Finance. So any finances they discuss with you, that's supposed to be confidential. They can't go back to the other side and say, oh, my buyer, well, he's pre-approved for this amount. He or she is pre-approved for this amount. So you can go up higher if you wanted to counter or something like that. I don't know. They got people are weird. Like I'm telling you, it's a dirty game out here. So some of these realtors, what I mean? I'm not pointing any names or anything, but I'm just saying like some of them, they just care about their commission. Think about the higher the sales price, the higher the commission. So keep that in mind. But as your agent representing you, they're not supposed to do that. They're supposed to represent you and only you in your best interest. Obviously, they have access to all the listings and then negotiate. So they're supposed to help you negotiate your with the inspection repairs, any repairs, dates, credits, closing costs in the buyer's favor. They're supposed to be there to negotiate in your best interest. And then here, they owe fiduciary obligations to you as the buyer. So as a part of let me tell y'all something real quick. So there's a difference between a realtor, and a real estate agent. So a real estate agent is just anybody who's gotten their license from the state authority. A realtor is a member of the National Association of Realtors. So as a member of the National Association of Realtors, we are supposed to abide by a code of ethics. In that code of ethics, we're supposed to put our client first and foremost before our own interests. So we're supposed to act as your fiduciary. We protect you and only you. We don't care about our own, personal gain. So keep that in mind. You definitely want to find somebody who's a realtor and not just a real estate agent. Big difference. All right. Let's see. Next, we got, what's next? All right. So home buying roadmap. This is just like a real high level view. So one is the strategy session. That's when you get with the realtor, you kind of set up what you're looking for, what you want out of a dream home. This is where I ask questions. I ask a lot of questions just to kind of understand where my buyer's coming from, what they like in the home, things like that. 1 and 2 kind of go simultaneously. What I would recommend is that you get with your realtor though to find out what lenders that they prefer. They've probably had a history of working with this lender. They know the lender can close deals and on time. That's key, on time. But you want to get with your realtor to see, if they have any preferred lenders. But, the lender is going to be the person that kind of gives you all of the different down payment grants, assistance programs they have, things like that. Next would be, well, first of all, so 1 and 2, my bad. So you want to get with the realtor, then you want to get the lender, and then you want to get pre-approved. The pre-approval process is very important, and I'll tell you why. So during the pre-approval process, the lender is going to review information. They're going to tell you how much you qualify for. So I want that up front as the realtor. I would like to know that up front because I don't want to show you $1 million homes if you can only qualify for 500,000. That's the waste of both of our times. And I got to be honest, like my first few years in the business, I used to show people houses without pre-approvals. And that was a big ass waste of time. Like I used to waste so much time doing that because they couldn't afford the houses I was showing them. So it doesn't satisfy either of us to do that. So it's very, very important to get that pre-approval done up front so you can know how much you qualify for. So then the realtor can start sending you homes that fit underneath that parameter. All right, cool. So number 3, once we get that information, then I set up a search, and this is typical for all realtors. They'll probably set you up on some kind of search based on your criteria, and you can mark homes as your favorites. And then we go through and you tour those homes. Once we get to that point, you find a home you love. The realtor is going to go back and look up the comps for that home to see if what you're offering is fair. What they're asking for is fair. And then you decide what you want to offer based on amount of information, which I'll cover in a second. Once that's accepted, the offer is accepted, you go ahead and turn in your deposit. I know we have some people in here that live in attorney states and some that live in title states. So I'm not really sure how y'all do it in attorney states, but with the title state, like in Louisiana, we give the deposit to the title company. And I know some states also have option money, which is different from a deposit. Like in Texas, I know you would pay the seller an option fee for the option, to basically put the house under contract. I remember that for sure, separate from a deposit. But nevertheless, that happens in the escrow period. During the escrow period, you also do your due diligence on the property. That's when you're going to hire your inspectors, things like that, and research, insurance rates, quotes, all that stuff. Then the closing happens. During this closing process, in between the escrow and the closing process, the loan process is going to continue to go on. They're going to request more information. They're going to get an appraisal audit, review the title, make sure it's clean title, because remember, you can't pass title to a new person unless it's clean title, at least in Louisiana. They have to make sure there's no liens or judgments against the seller to make sure that they're transferring property to the new person, clean title. All right, so that closing happens, and then, you're the new owner of the home. So make sure before you take ownership, make sure you do a final walkthrough of the home and transfer the utilities in your name. All right. So when it comes to the mortgage process, the pre-approval process, I wanted to cover a couple of things. So these are some things you want to consider, like what's going to be your down payment. There are certain loan programs that don't require down payment. You need to know that up front so you can save appropriately. Interest rates. If you haven't looked into Mortgage News Daily, yeah, that's it. Mortgage News Daily. That's a website that I use and I subscribe to every day around 3-4 o'clock. They send me an email, let me know what the average mortgage rate for a 30-year fixed, 15-year fixed, adjustable. This is all the different loan products nationally. I just like to stay abreast on what's going on. I know the current rate today was 6.35 or something like that. It's up there, 6 point something. But anyway, I just like to kind of know that. I like to stay abreast of what's going on just because this is my field. Like I feel like as a realtor, you should know that. All right. So debt to income, that's important. Specifically, there's different loan programs, which I'll cover shortly, but each loan program has a different debt to income ratio requirement. So something you should probably know is called a front end ratio and a back end ratio. The front end ratio is going to consider the debt that's on your credit report. So when the lender is reviewing your debt to income ratio, they're strictly looking at credit report. So any debts that's on your credit report, that's what they're looking at. So for the front end ratio, they're gonna take the debt that's on your they're gonna take your your debt that's on your credit report divided by your income you bring in. So that's your front end ratio. Your back end ratio, they're gonna take your debt that's on your credit report plus your projected monthly payment divided by your income, and that's how they determine that. You know, we don't have to get specific on here, but with the FHA loan is more lenient. They're willing to, you know, it's an easier way to qualify with that one as opposed to like conventional. But just know, you know, debt to income. So they're taking the credit report debts divided by your monthly income. So monthly credit report debts divided by monthly income. All right, closing costs. So this is something you need to consider. A lot of people, I realize, they don't really understand what goes into the process, and they don't think about closing costs because they don't know. But your closing cost is considered basically your lender fees, your title company fees, any prorated taxes, any prorated insurance, plus a year's worth of insurance up front. So that's going to make up your closing costs for the most part. You may have some other things in there, but that's the majority of it. What I would suggest, though, when it comes to applying for loans, if you want to shop, you can. The law allows you to shop around for different lenders because maybe you don't vibe with a certain lender that your realtor recommends. Or maybe in my case, I always recommend 2 to 3 realtors every single time because I don't want my client to select one. Like say, for instance, I only recommended one person. They go with that one person and it doesn't work out for whatever reason. They don't like the attitude the lender has, or the lender doesn't fulfill their duties. Well, then it looks bad on me because I recommended only that one person. So I try to recommend 2 to 3. It still will probably look bad if it doesn't work out, but I give them options, at least so they could talk to the person and kind of fill them out and see who they want to go with. Because at the end of the day, they're all going to probably offer similar similar interest rates, but the fees they're going to charge are going to be different. So what you could do in that case is ask them for a loan estimate. That loan estimate will allow you to compare apples to apples before fully deciding which lender you want to go with. All right, so one thing I want to point out here is the Consumer Financial Protection Bureau. So that's a regulating agency. And what they do is they allow you as the borrower to shop lenders. So there's a rule, it's a law, Consumer Financial Protection Bureau, that basically states if you go and apply to one lender, on say today is February 7th. So on February 7th, I applied to one lender. It allows you to shop mortgage lenders for a 45-day period. So if I apply today to one lender, I have 44 more days to shop lenders and they can run my credit. And what's going to happen is it's all going to be treated as one mortgage inquiry on my credit report. So it's going to look as one mortgage inquiry, period. I can shop as many lenders as I want in that 45-day window, but it will decrease your score a little bit every time they apply. It's going to decrease your score about 2 to 3 points every single time. So what I tell my clients is, you know, if they want to shop, that's fine. What I recommend is they go ahead and apply the first time, get their credit score so they know what it is, because the lenders by law has to give it to them and tell them what it was. But get their credit score, and then when they want to go shop to the next lender, just tell them what they have. Like, you know, I have a 850 or whatever it is. They tell the lender, and then the lender can generate that loan estimate without the borrower sitting there and having to apply for a loan. Because we got to be honest, like the application part, that's aggravating. Like it's just burdensome. It's extra stuff you got to do and submit, and who wants to do all that? So if I do it one time, I could just give the next lender my credit score and tell them what I'm trying to do and let them generate a loan estimate based on that information they provide. Then I can compare apples to apples and make a decision on who I want to go through. All right, I see there's stuff in the chat box, but I can't read it. So if I'm going over something, Dan, stop me. That, you know, we need to cover. All right, so down, huh? What'd you say?
I got you, bro. I got you.
All right, it was an excuse to take a drink. All right, so down payment requirements. So I say, all right, you see on the screen, in general, when you put down less than 20%, mortgage insurance will be required. I say in general because there are programs out there where you don't have to put down 20% and you still don't have to pay mortgage insurance. I'll cover it in a future slide. But a lot of programs out there are for first-time home buyers. What I would suggest here is that you get with your realtor and get with your lender. So the lender, they do this on a day-to-day basis. So they're going to be really, really proficient with this information. The realtor should be for the most part, but don't expect them to be experts. I try to train like with Service First, all of our agents. Like I try to tell them the more knowledge you have about these loan application process, not loan application, these loan programs, the more valuable you become. So like I'm always studying this stuff because I feel like if I know the ins and outs of the programs, then I can identify the buyer that's tailored to this program. So anyway, conventional is a little harder to qualify here, but lower rates for borrowers with excellent credit, no limits on the area, income, or occupancy type, and you can put as little as 3% down. FHA, low interest rates as well, but they're more forgiving on the credit than a conventional loan. So remember earlier I was talking about the front end and back end ratio. So with conventional, I can't remember it offhand. I want to say a front end ratio of 28%, back end ratio of 32%, something like that, as opposed to FHA, which is like in the 40s for both. So that means that it's more like you can have more debt to income to qualify for FHA loan as opposed to a conventional. But if in all things equal, if I'm representing, my client, I'm going to tell them to go conventional over FHA if they could qualify for both. Because first of all, conventional loan looks better when you're putting in an offer to a seller because it's less hassle that they got to deal with. You know what I mean? With the appraisal process, FHA appraiser is going to be looking at way more things than a conventional would be as far as the property qualifying. In addition to that, with FHA, you have private mortgage insurance that never goes away, as opposed to a conventional loan where you can get rid of it when you have 20% equity in the property. So it's just, that's the ins and outs of the loan programs. These are the main two, by the way. USDA, that's 100% financing, no down payment. It's flexible credit guidelines. You got to have, it's all parish or county specific. I believe out here in the area where I'm at is the income is like you can't make more than 103,000 household income. So it's specifics to this. The property must be in a rural area. I put that in quotes because like just because you may think it's not rural, that doesn't necessarily mean it's won't qualify for the property. I mean for the house, for the loan. I had a property that's in a city, but it was qualifying for rural, which was weird to me. So I started looking into it a little more, and I realized there's a lot of properties that qualify for this. That's not necessarily in the rural area. So there's a website on USDA where you can, like if you Google USDA RD for rural development eligibility, you will find a website where you could pop in any address and it'll tell you if the property qualifies. Remember, it's income driven though. You can't make over a certain dollar amount to qualify for this program. And then the VA. So VA, you got to be a veteran or be a spouse of a veteran. There's no down payment or mortgage insurance required. And there's real flexible guidelines when it comes to the credit. But there are so many down payment assistance programs out there. Every state, every city is going to be different. Something I wanted to point out and I have in my notes here is when it comes to first-time home buyers, just because, all right, so if you're a first-time home buyer, that doesn't mean you never bought a house. Like you can have purchased a house with it. 2023. Let's say I purchased a house in 2015, and for whatever reason, it didn't work out and I got rid of it. So I sold the house or I sold the house and I've been renting since then. Well, I'm in 2023, I'm considered a first-time home buyer again. First-time home buyer for mortgage purposes is someone that hasn't owned a home in the past 3 years. So keep that in mind. If you haven't owned a home in the past 3 years, you're considered a first-time home buyer. One thing I want to mention is some lenders, they keep their loans in-house and they have way more flexibility on the qualifications. So like when I say in-house, I mean, do I have a slide? I think I got a slide coming up on that, but I'll just briefly touch on it. There's one bank out here that I've been using lately where they offer 100% financing with no PMI. As you can see on the screen here, when you put down less, and that's why I say in general, when you put down less than 20%, mortgage insurance will be required. PMI is private mortgage insurance. Basically, it just protects the lender in case the borrower defaults on the loan. It could be, a couple like 20, 40, 60 bucks, or it could be 100 and something, multiple hundreds. I know somebody who's paying $225, $226, something like that a month for private mortgage insurance. And they have an FHA loan, so they can't get rid of it. The private mortgage insurance is primarily driven based on your credit score. primarily, but there's some other factors too, like how much of a down payment, things like that, but primary credit score. Where I was going with, oh, so these loans, usually what the lenders do is they make the loan and then they sell it in the secondary market. So that's why they have to follow Fannie and Freddie Mae guidelines. So those guidelines make you get private mortgage insurance, make the lenders get private mortgage insurance, because they have to be eligible in order to sell them to the secondary market. Well, there's some lenders, some banks that will keep the loans on their portfolio, meaning keep it on their balance sheet, so they won't sell it in the secondary market. These are the type of loan products that I'm talking about, where they're more flexible because they're keeping the loan in-house. They don't have to match Fannie and Freddie Mae guidelines because they're not selling it in the secondary market. So some will offer 100% financing with no PMI. I know Navy Federal is big on that. They have 100% financing with no PMI. So you can look into that if you would like. But just explore your options. And every lender, like I say, all realtors not created equal. All lenders not created equal at all. So, and all lenders offer different products. So just ask them, see what best suits you. Like when you talk to them on that initial conversation, what can you do to get me in this home with the less money out of pocket and the less headaches? Ask them that. Don't be afraid. They're there to serve you. If they can't do it for you, then move on. They got a lot of lenders out here that want your business. All right. Closing costs. So I think I mentioned it earlier. So you're going to be required to pay some fees at closing. They must be paid in full unless you're able to include them in your financing, right? Okay. So in general, you'll see like prepaid insurance. Some lenders, it depends on the lender and what they require and the time of the year you close, but they maybe require 2, 3, 4, 5, 6 months of prorations. So for insurance, so keep that in mind. You're gonna pay the appraisal fee, which usually you pay on the front end, but that's a closing cost fee. Closing fees just depend on the title company. These fees in parentheses, don't even worry about it because this is specific to Louisiana, but just know there will be closing costs involved in the transaction. Prepaid insurance and prepaid taxes are probably a must everywhere. The mortgage origination fee, honestly, like if it's more than 1%, I wouldn't use that lender no matter what, period. 1%, it used to be the norm. I'm seeing way less now, but it's something to look at. If you're estimating stuff, helping your client, I like to be a resource to my client. So I like to give them all this information on the front end, but you want to see something for less than 1% for a mortgage origination fee. And then there's title fees or attorney fees if you're an attorney state. All right, cool. So searching for your new home. So this is what I do with my clients. Once I know what you're looking for, like the criteria, how many bedrooms, baths, square footage, areas, things like that, I create a search in the MLS portal that basically sends them homes that fit that criteria. And so once they get those homes, I allow them to go through and mark whatever properties they like as a favorite. And then I think I'm skipping ahead of myself. Let me see. Yeah, okay. So once they go through and they favor those homes, I like to, because usually what I see is, and you need to be conscious of this when you're looking for homes as well, because you don't want to overload the realtor. But usually what I see is buyers would like a bunch of properties. So then I go through and look at the favorite homes and look for ways to consolidate the list, because honestly, I'm not trying to show 10, 14 houses in a day. Like, I'm not trying to do that. It's just not respectful of both of our time. So what I do is when I get those houses, I set time aside and I just go through every property disclosure and every, in the MLS, there's a section on every MLS. I don't know what it's called in your market, but it's similar to like an agent remarks section. And in that agent remarks section, what that does is it allows other realtors to communicate with each other. So we may say something in there that we don't want on the public remarks, where you can see it on realtor.com and Zillow and things like that. But we may say something in there like if it's a duplex, Unit B lease expires March 31st, or I don't know, whatever it is. But anyway, I review the property disclosure and I review the agent remarks. And I try to kind of like cut the list down, because if they favor 10 homes, I'm not showing 10 homes. I'm gonna just be real with you. Even like looking at 10 homes, they all gonna start to be confusing anyway. They all gonna start to look alike. You're gonna be forgetting if we seriously went through and looked at that many homes. So I'm saying that to say, I want you to think about that on the buyer side when you're buying a property. Like, you don't want to bombard your realtor with all those properties, because at the end of the day, you're gonna start getting them confused. And it's just not the best use of everybody's time. So I go on the back end and I try to, cut that list down. Maybe it's 10 houses they have, but some of these properties don't even fit the criteria that they told me at the beginning. Or some may have issues in the property disclosure that they either didn't review or didn't have access to. Where we can scratch that off the list. Or some may be in a flood zone and they told me they don't want to be in an AE flood zone, which is the worst one. So I can, eliminate that list down a little bit. Well, not eliminate it, but cut it down. So when it comes to making an offer, you have to consider the terms. It's really not always about the best price. All right. So when I'm putting in an offer on the property, and actually, let me see. Oh, I got somebody on here. My girl, we did a deal together. She a realtor in New Orleans. We did a deal together not too long ago, a couple months ago. But when I'm looking to put an offer in on a property, what I do is I review the property history to see how long it's been on the market and if they've been under contract before or not. That kind of gives me information. It helps me best customize the offer strategy, right? And when you're making an offer, you got to consider all these things on the screen. So sales price, deposit, due diligence period, seller contribution towards your closing costs if you're going to ask for it, your financing, is it an FHA loan? Is it a conventional loan? The closing date. Do you want them to include the refrigerator? Do you want them to include the TVs on the wall? Whatever. You just got to consider that kind of stuff, the personal property. So all that is taken into consideration. And what I like to do is I like to reach out to the agent prior to putting in the offer just to see, is there anything specific that the seller absolutely needs in this offer? Let's say we have a seller that they need to be in the property by the end of March. Like they absolutely can't move until the end of March. Well, that's good information to know, because then I will make the offer, the closing date, the end of March, or, I'll coordinate around that. Because I want to put in an offer that I know is going to get taken, especially when it's, a highly competitive market like it was in 2020 and 2021. So that's just something to keep in mind. You want your agent to kind of like take everything in perspective before putting in the offer, because it's not just all about price. Let's say we're competing and I called the agent, but the other agent didn't. And I know some information about the sellers that the other agent didn't consider. Like I know that the sellers can't move out until the end of March, but that other agent thinks, I'm gonna put in a quick close, they're gonna take my offer. Well, no, that doesn't necessarily work like that. They may take mine because I considered their move out date. So it ain't all about the sales price is what I'm trying to say. And then also something to keep in mind is a buyer's market versus a seller's market. In the current market we in is kind of steering, it's probably somewhat balanced, but it's probably steering more towards a buyer's market, as opposed to the last 2 years, how it's been seller's market hot. You put in an offer and, it has multiple offers same day, and it's selling for more than list price. That's not the market we're in right now. Primarily because of interest rates, they're higher. And then when in the 2s and 3s like they have been. But something I like to point out to my buyers is for them to consider, like on the screen here, if I'm putting in $250 and I'm asking for $5,000 in closing costs, that's essentially only $245 to the seller. So I want them to consider the net offer, because at the end of the day, this is all else equal, not including fees, title fees, and things like that, or realtor fees. This is what the seller's walking away with. So I want my client to consider the net, not so much just the offer price. Because if they're asking for seller's contributions, money towards their closing costs, I want them to include that in the net. So I try to frame this to my buyer to where we need to consider what the seller's walking away with. Because that's if they have a really experienced realtor on the other side working for them on the listing side, that's what the listing agent is pointing out, like how much you're walking away with. That's what they want, that's what they care the most about. That's what they should care the most about. But like I said, you also have to consider all these other things. All right. So whenever you do put in that offer, you want to make it stand out, right? So you want to operate from a position of strength. So you want to have that pre-approval. Like if you're putting in an offer and you don't have a pre-approval, that's a waste of everybody's time, because nobody's going to seriously consider that. You want to consider the types of financing. If you are approved for conventional and FHA, probably want to go the conventional route, because there's a stronger chance of them accepting that as opposed to FHA. You want to have an aggressive due diligence period. So I don't know how it is in y'all markets, but in Louisiana, we input the number of days we want for inspections. The buyer's agent is going to do, the comps, and they're going to make sure that whatever comps they run, it should support that offer that you're submitting. And then you just want to have walkaway leverage. You don't want to be like tied to the property where I gotta have this house, you know, you on camera at the house when you're looking at the showing like, oh, this the house for me. I gotta have this house, because the seller can see that. Now they know that, you know, you really want this house. So they're gonna do what they can to squeeze as much money out of you as they can. So I'll give you a quick little example. I got a listing out here in Baton Rouge, and we got an offer. And in the offer, they submitted $20,000 less than our list price. Okay. Then they also asked for $10,500 in closing costs. Then they also made the offer contingent on the seller selling their home. Their home not even listed yet. Like, why would we accept that? So then when we declined it, the agent got mad. It was like, y'all not even gonna counter? I'm like, no, you wasting our time. Like, why would we counter that? You 20,000 less than this, asking for 10,500 in closing, and you making it contingent on a home that's not even on the market yet. Like, you sound silly. So he got upset, but I'm like, bro, you wasting everybody's time. Like, you wasted your time writing that off. You know that you shouldn't have even wasted your time doing that. But anyway, I guess they feel like because it's trending towards the buyer's market, they feel like they could do that. But I don't know. Either way, just make sure your offer stand out. Like it says here, you want to make offers that the other party can sign. You don't want to play these games like just offering something just so they can counter. Like, nobody got time for that. So keep that in mind when you're putting in the offer or when you're ready to put in that offer. All right, so getting your offer accepted. So when you do submit the offer, the seller can either accept it, they can counter, or they can reject it. Most times they'll counter, depending on the market we're in, but most times they'll counter. And at that time, once they receive it, you know, y'all agree to terms, you're gonna have to put your deposit up with the title company or attorney. And it's usually, in my opinion, you know, we choose what we want the deposit to be. What I try to do is 1 to 2% of the sales price, usually. Sometimes just depending on the situation. Obviously, if you're in a competitive offer situation where there's multiple offers, you probably want to put a stronger deposit that's just showing that you're a stronger borrower. But as the realtor, I would never let you lose your deposit money because I want to make sure I follow all the timelines in the contract. So good point here is, if when you're, you know, buying this property, you have your realtor represent you, make sure you fully understand the terms of that deposit and how you can get it back. Because your realtor should be advocating for you to make sure that you're following every single timeline in there so that you don't lose that deposit. All right. So once we go into contract, you want to get a comprehensive inspection done. There's all different kinds. I'll be honest with you. There's the general home inspection, which I definitely recommend you get no matter what. A lot of people waive this, especially when there's multiple offers. I wouldn't do this. It's not smart in my opinion. But you definitely want to get that general home inspection. In Louisiana, especially in New Orleans, I always recommend my clients get a video pipe inspection. That's when the plumbers come through. They'll put a video camera down the pipes all the way to the city line connection where it meets. And just to make sure that there's no breaks underneath the slab, or there's no sags in the line, things like that, or corrosion where the sewage is not properly flowing. You want to definitely get that done because that could be an expensive repair. And once you buy the property, it's your problem. All right. Termite inspection, you want to get them to look at that just to make sure there's no active termites. And sometimes you want to do mold. What I do is, if the general home inspection, if he or she goes through and identifies some areas that we may want to follow up on, then that's where we might want to get this specialized inspection done. Either way, you should get an inspection. And this is where your realtor comes into play, because you want to make sure that your realtor has professionals that they can recommend to you that they've done business with before that's qualified. So you don't want to just start Googling trying to figure out something, you know, figure out an inspector. Your realtor should have this person already on deck, or a list of people. Something to keep in mind, there's no pass or fail when it comes to inspections. The inspector always gonna find stuff, always. Some may be little, some may be big, but they're always gonna find something. No house is perfect, and you should definitely attend the inspection. If you can't, that's fine, because they'll give you a report. But they're always gonna find something. Like, that's what you're paying them to do. They're gonna find something. All right. So once it's done, they're gonna send a written report to you and the agent, and you want to go over this report with your realtor, and then you decide on how you want to proceed. So there are gonna be a ton of items on there. Some may be important, some may not be. And that's where the realtor's expertise comes into play here, because they are gonna guide you and tell you what's important and what's not. And then based on that information, you'll provide, the realtor will provide the written inspection response to the listing agent, asking the seller to fix whatever items. So at that point, the seller is going to decide, yes, I'll fix all of these issues. No, I ain't fixing none of it. Or yes, I'll fix some of it. In Louisiana, now I don't know how it works in your state, but in Louisiana, at that point, once the seller responds back, the buyer decides, okay, that's an acceptable response and we're moving forward, or no, I don't accept that response and we're canceling. And that's it. But it's important that you go through that process, because if not, you could be buying a lemon, or you could be buying a property that has a ton of issues if you didn't go through this inspection process. Let's see, due diligence. Yeah, and if in Louisiana, if the buyer decides to back out during that period, during that due diligence period, they get their deposit back. So at closing, you made it to the finish line. We've done all that. You want to finalize home insurance quotes, get that taken care of, verify that the lender has all the required documents. You want to do a final walkthrough of the property. This is key, because let's say during that inspection period, you told them you wanted X, Y, and Z fixed, and they agreed to do it. So you want to go through that final walkthrough and make sure that they did it like they said they were going to do it, or that they provide you with some proof, some invoices, things like that. And also, when you're going through the property, most of the time there's furniture and things like that all over the place. So you really can't see every single piece of the property. So during that final walkthrough, you want to make sure that what you're going into is exactly what you think you're getting before you sign those documents. And you want to run the water, just make sure the water pressure is fine, things like that, just checking it out before you sign those papers. You want to also review that closing statement just to make sure everything is accurate. We had a situation that happened yesterday. Oh, no, not yesterday. What today is? Tuesday. It happened Friday. I'm sorry. Where the mailing address was wrong for the buyer. So you just want to make sure that's accurate. Like the amounts on there, the addresses, the names, you want to make sure all that's accurate. Any type of credits the seller said they were going to give you in closing costs, you want to make sure all that's included on there. And usually, well, not usually, the law requires that the lender sends this to you 3 business days before closing. And they include Saturday as a business day. So that's the law, the federal law. The closing disclosure has to be, the preliminary closing disclosure has to be reviewed and signed by the borrower 3 business days prior to closing. And Saturday is included as a business day. As far as closing, you're gonna be there, obviously, the seller, the buyer's agent, the listing agent, closing attorney, and then sometimes your lender pop in there, sometimes, not all the time. But that's typically who's there. You can also have separate closings where you're not even all at the same table. I remember in Texas, I don't think we ever had a closing where the buyer and the seller were at the same table. We used to close separately. In Louisiana, we pretty much always close at the same table. The buyer's on one side, the seller's on one side. So I'm guessing this varies in your state. And then as far as what you're going to need, you need a valid government issued ID. Usually your driver's license will suffice here. And then if you're wiring funds, you need to do that. And or you bring a certified check. Not sure what the law is there, but I know out here, anything over 25, like if you have to make a check over $2,500, it can't be a personal check. It has to be like a cashier's check. If it's under $2,500, they can write a personal check. And that's pretty much all I got, y'all. So I know there's a lot. I'm gonna stop sharing my screen real quick and open it up to questions. All right.
There are a few in the chat. It's just a few.
All right, well, you read them to me because it's a lot.
Bet. So the top one is, do you use automated software to follow up with clients, or do you reach out to a certain number of times per year?
Who asked that? From a realtor perspective or a buyer's perspective?
I apologize. That question is from Sierra. Sierra, you can come off mute if you want to. I don't mind if you put your hand up, I'll mute you.
That's probably a buyer's perspective. But yes, I have a CRM that I use. And I follow up with my people, like at least everybody in my database, I follow up with them at least one time every quarter. That's just my personal way of doing it. Everybody's different though.
Okay, that's helpful. Yeah, I was asking just from like coming into this as like starting a small business or whatever, just as I'm interacting with clients, like what's like a frequency that you maintain, but that makes sense.
That's just what I do. So like I say in the statistic, like a lot of realtors are trash. They just, and I'm just being honest, so they don't keep in touch with their people. So that's why that number, I think it was 93 and 13. So 93% they say they were gonna use them again, and then only 13% actually use them, is because they don't keep in touch. They just sell them a house, they collect their commission, they go about their business, on to the next transaction.
Okay, and do you use like a specific CRM software, or you just set like reminders like in your email calendar?
You a realtor?
No.
Oh, okay. I use one specifically for realtors. It's called Real Office 360. That's what I
Okay,
use.
I've seen
But
that one.
there's a bunch of them out there. All of them have different bells and whistles. It's just I got the most simple one because I don't need all that. I keep it simple.
Okay, awesome. Thank you.
Yes, ma'am.
Thank you, Sierra. I got a question from Antoine. I'm not entirely sure what it is, so I'm going to give him the option to come off mute. But it's front end DTI or back end DTI. I'm not sure what that means.
That was the back end ratio and front end ratio I talked about. What's the question?
Hello?
Nothing. Come on, there he is. There he is. Go on, Antoine.
Oh, yeah, I'm here. No, you was explaining how you doing, by the way? Great,
All right,
great,
all
great
right.
gems, great presentation. I was just wondering, you described how to find the DTI. You said credit report divided by monthly income for the front end, and I just didn't get the back end.
Oh, it's so the front end is every debt that's recorded on monthly debt that's recorded on your credit report divided by your monthly income. Gross is always gross. And that's another thing. Well, hold on, let me finish this, then I'll go on my rant. All right, so that's the front end. Back end is gonna be your monthly debt on your credit report plus the mortgage payment. So the mortgage payment is gonna be the principal, the interest, the taxes, and insurance. The monthly mortgage payment divided by your monthly income.
Okay.
And if you're in a flood zone that's required to have insurance, they're gonna include that in your mortgage payment too.
Okay. All right. Yep, that's all. Thank you.
Yep. So what I was gonna say is, when it comes to qualifying, what I'm actually, man, how can I? All right. So I'm actually writing an ebook right now. It's gonna be released in 3 more weeks. But I'm talking about this. It's called I'm Out, Escaping the Rat Race, One Income Stream at a Time. And it's talking about like how we on this never ending rat race. Like we get a raise, we go out and buy a new car, go out and buy a new house, whatever. Like we just keep spending what we get. And like when it comes to houses, I always advise my clients, like if you're pre-approved for 300, don't go out and get a $300,000 house. You don't need that. Like you don't necessarily need that. I'm not gonna manage somebody else's funds, but just because you qualify for it don't mean you necessarily need to go get it. You know what I mean? So when they do the qualifying, like these debt to income ratios we talking about, they're using gross income, gross, not net. They don't factor in your monthly expenses on groceries, your monthly car note. Well, I guess they will. They're using gross is what I'm saying. They don't know what you're spending on the daily outside of things that's on your credit report. So, your gross income obviously going to be higher than your net, what you really having at the end of the month. You know what I'm saying? So I'm just saying, keep all that in perspective. That's all I'm saying. So, yeah, people be spending just because they got it. They feel like they can go spend it. Then they spend their time working to pay the shit off. It's stupid. Makes no sense. But that's another story. What's the next question?
Leslie asks, can you restate how you are considered a newer homeowner? I mean, that was the example you gave about the 2015 versus 2023.
So when it comes to the underwriting guidelines, Fannie Mae, Freddie Mac, a new homeowner is anyone who has not owned a home in the past 3 years.
There we go. Nice and simple.
And
Leslie also asks, how can the realtor help with new buyer identifying areas to consider, i.e. safety, school ratings, etc.?
Safety. So that's a fair housing thing that we're not supposed to get into. We can't talk about safe. I can't say, I want to show you this house is in a safe neighborhood because that give me a lot of trouble. So what I always advise there is to Google, can't think of the name of there's a website where you could prop in an address and it'll tell you, the ratings for the area. Let me show you. So I can't think of it right now, but there are websites, more than one out there. So I would advise you to check that out. They tell you the areas, the specific areas or whatever. This particular website right here. So there's a school website where essentially what you do is you type in, here, go right here, greatschools.org. This is for anywhere in the country. You type in the address. Let me see. I'm typing in my old address from back in high school because I don't want y'all to have my new one on screen, you dig? All right. Oh, damn, it didn't even pull up. But anyway, you will basically type in the address and it'll tell you like the schools nearby and their ratings. So that way you can kind of know if you were interested in a particular property, you type in the address on here and it'll tell you the ratings of the schools nearby. Like this, okay, so this New Orleans, don't judge us. Let me show you. That's where I'm at. So I moved to this particular area now because the school district is so damn good. Like, you know, it's 9s, 10s, and 8s. So that's where I'm at now with it. But anyway, it's called greatschools.org. You can check that out, pop in any address, and it'll tell you the rankings of the school district or the schools in the area. Cool.
Nice one. Thank you very much. Thanks for those questions, Leslie. Amelia, your question around tax liens is quite interesting because we literally had a presentation about that a couple of days ago. I think Michelle is in the chat. So you should definitely help Michelle or jump into our Telegram group. If you're not a member of the Telegram group, I will put a link into the chat now. But there are some comments about that. But you'll also find Michelle in the Telegram group who will definitely be able to help you with your question around tax liens. Literally a couple of weeks ago, we had a presentation about that. Let me see what else we've got. Seller concessions and seller contributions, the same thing. That's a question from Mikkel.
Same thing. Yep. Same thing, just different wording. Yep. So if you are a buyer in this market, and I feel comfortable saying this in all the markets across the US right now, if you're looking to get your first property, you could probably negotiate for some closing costs from the seller side. I feel confident saying that. So but what you should do, what your realtor should do, they should look at the history of that property, see how long it's been on the market, because obviously if it just came on the market, they're probably not going to want to do too much negotiation. But if it's been on the market for a while, that's like, you know, a lion smelling prey, you know what I mean? You know, it's easier to go after that. Not saying it's gonna work every time, but the probability of it happening is significantly higher when it's on the market for a while. Really depends on that seller's motivation to sell, honestly. But as a realtor, your realtor should be trying to get that information out of the other person, the listing agent. Yep.
That is all the questions we have in the chat. Unless anyone wants to put their hand up, they can hit the reaction button and use the raise hand option to ask a question. If they have a question for Antonio, I think he's got 13 minutes left.
I got a question. If you haven't purchased your first property yet and you plan to this year, raise your hand on here real quick. I'm just curious.
Yep. I'll put a fire emoji in the chat.
Leah, where you? Unmute yourself real quick, Leah. Where you at? What part of town?
I'm not stateside. Me and Dan been talking about this here, remote investing. So I am wanting to invest where there's a community of people I know. So right now I'm looking at Florida, I'm looking at Maryland, and I'm looking at Texas.
Okay.
So,
Gotcha. Okay.
I'm not gonna be at all anywhere near the property.
All right. Cool. Amelia, where you at? Is it Amelia that I'm reading that right?
Yeah, so I'm in Georgia. I actually am not buying a house. I'm building a house. I just closed on my land back in September. It was a cash deal. And so trying to weigh my options to either do tax lien sale or go ahead and start building.
Okay. Yeah, definitely holler at Michelle Patterson about the tax liens. That's her thing. For sure. Anybody buying a house to live in this year? I'm just curious. Any other realtors in here? I know, let's see, we got Martin and Ariel. Any other realtors? Okay. Well, any other questions?
No other questions in the chat. I think some people have an opportunity to catch Antonio for another 10 minutes if they have questions about this.
What up, Dominique? What up, bro? I unmuted you.
How's it going? Doing a great job. Question for you.
Appreciate it.
For the group, with the interest rate going up, are you still buying or are you just raising your rent? What are you doing at this point with the interest rates going up? Investment home, not a primary home, investment home.
So when it comes to investment, so it's a different way to look at it. So the way I'm looking at it is the interest rates have been going up for the last few months. It's just an opportunity where it makes these retail buyers get out, right? So the people that's buying houses to live in, they're scared because the interest rates are so high, which means their mortgage payments are a little higher. So they're backing away and they're more hesitant to buy, which is creating a perfect opportunity to me as an investor. So I'm looking for ways to, find these properties. I don't care about the interest rate. It's all about the numbers. Like interest rate, like 6.5%, like from an investor standpoint, that's fine to me. I'm cool as long as the numbers make sense, because I know interest rates will come down eventually and I can just refinance. But from a buyer standpoint that's going to live in the property, they may be more hesitant about buying because they look at their friends that got 3.125 and stuff like that, and they're looking like, damn, I should have got in when rates were that low. It's high now. I'm just going to wait. Well, if they want to wait, that's fine. But I'm buying properties right now. As an investor, I'm still buying properties, and you should too, in my opinion, if the numbers make sense.
Yes, sir. I appreciate it. I'm not hesitant. Like I say, I heard that, the interest rate up. Shoot, the renters are paying for it anyway. Like you say, numbers make sense. So get out there. Like I said, the interest rate will fall sometime soon. Like I say, you can refi what it does. Fall again.
So if people want, like, okay, this for everybody on here, that's from an investor standpoint, you want to wait. Okay, that's fine. You want to wait till rates come down. Okay, you can wait. Now you're just going to have more competition when the rates come down. More competition to get that property you really want from retail buyers, people who are going to live in the property. So that's how I look at it. It's all about mind, like your mind, how you frame it, you know what I mean? Like the perspective. That's all it is. There's always going to be deals.
Yeah, like you said, the diligence period, what you spoke on earlier, like I had a 14-day diligence period. Anyway, making a long story short, I'm gonna fast forward the story. The lady, it had a renter in it, and she was basically she was disabled, so she wouldn't be able to move to the next door for me to rehab it. And she had a long list of demands she couldn't, she was alerted to, and she couldn't move in the bed. She broke her ankles. I mean, she had a disability. I had to back out. I wanted so bad, but I talked to 2 lawyers about it. Said, ain't nothing but a lawsuit waiting to happen. And I found that out during my due diligence period. And I said, my realtor talked about it. She said, I want to stay away from them. She bought property manager too. So like you said, having a relationship with with your realtor, and she knowing the area, and I had to back out that deal. That's still my due diligence period. So
that's in Shreveport?
Yeah, it was.
Okay, cool. Yeah, man, there's gonna be more deals. That ain't the only deal on this earth. You know what I mean? You good. You're gonna find another one. But now it's very important. Like I can't stress this enough. Like, make sure your realtor know what they're doing, y'all. Like, man, I just heard some stories. So please make sure you know what you're getting into. For real. Shout out to Ariel. Ariel is the agent I was talking about on other deal in New Orleans. She know what she's doing. She a good one. So I unmuted you if you wanted to say something. How do you properly vet a realtor? Oh, go ahead, Ariel.
I was just gonna say, can you hear me?
Yeah.
Oh, okay. First of all, great presentation, by the way. I like it. I was actually taking notes, like, okay, he likes keeping his presentation simple, but just to piggyback what you said, like it's very true. The market right now is in that state of where you can negotiate closing costs for your buyers, especially if you represent the buyers. And for sellers, they need to understand the same thing. Like, listen, because of the interest rates and things going on, especially in New Orleans area with the insurance rates, like buyers gonna need some help. They're just gonna need some help. Like I'm seeing quotes that's $8,000, $10,000 just for a normal $200,000, $250,000 house. And that's crazy. So it's just, you have to learn to play the game. The timing is good. And that's pretty much it. And I am a good realtor, but I work with like-minded people. So that's how I'm able to be good.
You're funny. How do you properly vet a realtor? So in my opinion, this is just me speaking. What I would do there is I would Google them. Like it's 2023, everybody on internet, you know what I'm saying? So Google them, look at the reviews. They should have some type of reviews. All right. If you can't find reviews, or if you could, that's fine. The next step would be click on their social media page. What you would hope to see is some social proof, like that they're out there doing it. They're doing a business. They've had some closings. Maybe they post some testimonies, whatever. Just you want to see some social proof. What I've also learned to do is, like, say for instance, you go on LinkedIn and you see, or Facebook, and you see that you may have a mutual friend with that person. Well, reach out to that mutual friend and try to vet them there and see what kind of person they are, you know, things like that. I really like, I mean this, like there's realtors out here that they're like we said, commission bread. Like all they care about is a commission. They need to sell you this property. That's not the people that's gonna have your best interest at heart. Like you want somebody who's not all in it for the money. Like they're in it for the customer experience. They want you to be happy. Because when you're happy, guess what? You go out and start telling everybody else about me. And that brings in more referrals, more business for me. So that's my whole goal as a realtor. And that should be everybody's goal as a realtor, just to customer satisfaction. So, and you go with your gut. Like go with your gut. If you feel like that person trying to push you into a property, don't go run. Go find somebody else. There's a ton of realtors. Yeah, you probably know like 8, 9, 10 realtors. Honestly, everybody a realtor these days.
I say two variables. Number one is, and this happens across the world, so it's the same in the UK. There are a lot of salespeople who get into property. Salespeople want to sell, right? That's it. If you go to the electrical store, go to Best Buy and ask the guy, you know, what's the best hi-fi system? He's going to take you to the most expensive system first, and maybe he'll work back. But fundamentally, salespeople are trying to sell. That's their entire premise. And so, if you have salespeople that are in the property industry, you got to be careful of those people. I'm not saying all, but I'm saying, you know, if they're sales focused, then you know that's just numbers, it's turnover, it's generation of profit, and that's all it is. And the other thing is this: in all things, if there are no reviews, be mindful, right? At the end of the day, people are marketing their businesses. So if you can't find positive reviews, if you can't find like a Trustpilot page or a Facebook page or a Google page with information and positive reviews from people, then there's something to be wary of there, in my opinion. Because if you run any business, by definition, your preference should be to demonstrate to people how good you are by allowing people to review you. So if those people don't have like a simple Google page that doesn't say, like, you know, that allows people to click on it and put a review, there's a reason. And people can tell you whatever story they want about, oh, I'm not technical, I don't really know anything about websites. You know what? They can go on Fiverr and pay someone $50 and that stuff will be up there in 5 minutes. So be mindful.